To get started, my name is Eric Fitzgerald. I'm the Director of Acquisitions here at PassiveInvesting.com. I've been with the company since for about a little over 2 years now, which is crazy to think about. So started my career in property management in Pennsylvania, where I'm originally from. Worked for a company called Morgan Properties, who is actually, I believe now, the largest private owner of multifamily apartments. They have, I think, about 100,000 units or something along those lines, based out of King of Prussia, Pennsylvania. So I worked for them for a little while. Also worked when I was full-time in college, did student housing property management. So frat houses, sorority houses, all that fun stuff. So learned a lot doing that, did a lot of maintenance work and leasing and property management type of work in that role. Graduated from school, moved down here to Charlotte and worked as an analyst originally for a multifamily firm based out of Charlotte, doing primarily C and B class multifamily. Did a couple transactions there, moved into a role as an associate with a family office based out of New York and Chicago. And I was based in the Carolinas, and I was kind of facilitating our acquisitions in the Carolinas, doing mostly C-class value add opportunities in the multifamily space. Then, like I said, joined Passive about 2 years ago. Started out as an associate in the multifamily team. Kind of started that team, along with Brandon, and since then we've grown quite a bit. We've done I've led probably a $1.2 billion worth of transactions at this point on the buy and sell side, and also I've gotten involved in the car wash space, the self-storage space, and now I oversee all of our asset classes, from multifamily, self-storage, car wash. We also had a hotel acquisition last year as well. So really excited to be here. We've got a great team of acquisitions people. We've got a team of 8 now on my team, including myself, which is crazy, starting from 2 years ago, just having one person. So it's been a lot of growth, and I think we've learned a lot about brokers and broker relations along the way, or I like to think so. And so, that's what we're going to talk about today. And, like I said, any questions or comments as we kind of talk through this, feel free to put them down in the chat or in the Q&A. I'll be checking that kind of periodically, so we can, try to mold this conversation to be as helpful as possible. So I'll kind of start from, let's see, can you repeat the name of the property management company you named at the beginning of the webinar? So that is Morgan Properties. They're out of King of Prussia, Pennsylvania, near Philadelphia, Morgan. So I kind of start this off with, as if we were kind of starting new in the business, and how to kind of connect with brokers, how to talk to brokers, how to follow up with brokers. The vast majority of our transactions in the last 2 years at Passive have been through brokers, and they are the lifeblood of everything that we do from an acquisitions perspective. And so we're actually going down to Vegas, like I said, for a conference at the end of this month, and we're going to be, taking a bunch of brokers out, and we're going to get on a racetrack and take them out and race some fun cars, because we know that this particular group enjoys that. So it's things like that are really kind of making sure our name is at the forefront. So, we had a broker from Berkadia come to our multifamily intensive, and we were asking him, as a newer investor, what can we do, or what can newer investors do to stand out from the crowd of all the people that are looking to buy multifamily with how popular it is? And he had a couple kind of, bullet points that I have kind of written down, for everybody to kind of go over and, understand. And the one thing is, no one really cares. There was concerns about, well, I have so many partners. I have, I'm the capital raising partner. And then I have, it's like co-GP after co-GP, because we're just starting out. We don't have a ton of capital. The brokers don't really care, as long as there is one point of contact from that group to the broker. They don't really care how you're raising money, as long as you raise money, and as long as you're, doing what you say you're going to do. He was recommending that there is one point of contact to the broker at all times. And that person can then build the strongest relationship and amount of trust with that broker, especially as you're starting out. So, don't have your partner be contacting the broker and trying to ask him questions when you are the one that has a relationship with him, and you're the one that kind of knows him and has spent time with him. So that's kind of a big piece of advice that he had is, a lot of new investors have concerns about how they're raising money and, all the partners that they have and everything going on. And he's like, just pick one person and have that person build a strong relationship with the broker and, create some trust in that relationship and kind of go from there. I see a question down there. What's the conference name in Vegas? That is NMHC. It's the National Multifamily Housing Conference, NMHC, down there in Vegas on January 30th, I believe, through February 2nd. So all the kind of, institutions will be there. All the brokerage companies will be there, and that'll be a good time in Vegas. So kind of, how we've created the success that we've created, like I said, has been all through brokers. All of the deals that we source are through brokers. And so some of the things that we do from a practical perspective to make sure that we're kind of first in line for these deals is we have a built-in follow-up system throughout our whole acquisitions team, where I can go in and I can see, when is the last time that, Chris talked to, Jay from Houston, Texas. And there will be notes. We'll put notes in there every time we talk to a person. And so it'll automatically ping us every week or every 2 weeks, depending on the priority level that we set the contact of, hey, you haven't talked to this, this man or this woman in a week or 2 weeks. It'll ping you to reach out through your email. And, that's just a simple CRM. We use DealPath, which is kind of an all-in-one like pipeline management, as far as deal flow, contact management. It's more expensive than a lot of people need at this point. We're just built out to the point that we use that for all of our asset classes. But you can use like Monday.com, Asana, or any other kind of free CRM service to set something like that up. And it's as simple as uploading the contact information of the brokers, setting a cadence of how often you want to be contacting them, and making sure that it's being done on a certain level. So Steven's asking, can you type out those CRMs? Yes, sorry about that. So that's Monday.com. And Asana. And both of those are free, so anybody can use those. And so, I would recommend, and this is another thing that the broker from Berkadia said at our intensive, was, making sure that you're staying top of mind, because as much as the broker may like you, he's not sitting around and thinking, oh man, how can I get this guy a deal? He's thinking about how can he help his seller, because he represents the seller. And how can they get them the easiest and the highest priced transaction possible? So they're not sitting around like, oh man, Steven emailed me that one time and said he was looking for 15 to 20 unit B-class deals around the Charlotte MSA. I should give him a call on this deal. They've got so many people always reaching out to them. So it's important to, like I said, just set that cadence with them. Maybe the first call is like, hey, I've got a capital background. Maybe if you don't own anything yet, just talk about, hey, I've got an engineering background. They like to, one thing he did mention is they like to hear that you're successful in other business lines, because that shows that you're not just a tire kicker that's coming in and, maybe hasn't experienced any, success in any other avenue. So they like to see that, they like to hear about, what have you done in the past, your accomplishments, your success in the past, and, how can you kind of translate that over to multifamily? Let's see, Mike is saying, one of the pieces of feedback I've heard is that we should be adding values to the brokers. For the newer investors, how do you recommend we add value to brokers? That's always a tough one. So, I would always say, try to meet in person as much as possible. And as soon as they send you a deal, if you're within the local market, get feedback to them very, very quickly and get on a property tour with them as soon as you can. Actually getting on property tours and meeting with these people in person is one of the best ways that you can develop credibility and trust and friendship with these brokers. And it shows them that you're not just, receiving a deal and letting it sit in your inbox, and then they just won't even follow up with you because they know and as soon as that happens, they know you're a tire kicker and they will not prioritize you at all. So the first deal that they send you is very important. And the first deal that they send you is probably not going to be a good deal. It could be, but it's probably not going to be. But still, underwrite the deal, get them feedback, get them really solid feedback. And if you say, hey, look, on a trailing basis, this property at your asking price is asking for a 4.5 cap. But, with the current market, with interest rates at 6%, there's just no way to make this deal work. That's too much negative leverage. I think, the market cap rate for this deal is probably closer to a 6 to kind of get to that neutral leverage, versus the interest rate and cap rate. And so intelligent kind of feedback like that is going to tell them, oh, wow, like I can't just pawn anything off on this guy. He's actually thinking about these deals. He's technical in his analysis. So, that would be another one of the things is, make sure you understand underwriting as well. And there's plenty of, ways that you can do that. I know we have webinars here that we've done that on, and there's plenty of YouTube videos. If you search, multifamily underwriting, there's a ton of YouTube videos out there, and I'm sure we've got plenty of content on that as well. I think we've gone through some underwriting on one or two of these webinars before. So that would be one of the best ways is to add value, is to just get them solid feedback. And you're not going to be able to add a ton of value to them on the first conversation if you're a brand new investor. But making sure that they know that you're serious and you're coming into it with technical analysis, really quick analysis. We have a 48-hour rule in our kind of analysis process, where when we get a deal from a broker, 48 hours, we have concrete LOI ready pricing or feedback for them. And we didn't used to have that. And that's, I wouldn't say that that's super typical, especially with the volume that we handle. But, we're at the point where, we have the team, we have the systems to be able to turn around deals pretty quickly. Kevin's asking, I appreciate the questions, guys. Keep asking questions. It keeps the conversation moving and hopefully more helpful for you all. So how often should you follow up with brokers for them to send you deals? Also, what do you say after initial conversation? So like I said, usually a week or 2 weeks, we have that kind of reminder that will automatically remind us through our CRM system that will tell us to reach out to the person. And I wouldn't be calling them every week and saying, hey, you got a deal, hey, you got a deal, hey, you got a deal. And maybe you call them and say, hey, I saw this, piece of news about this, factory moving in, or this, employer moving into this submarket. How do you think that's going to change the dynamics of this submarket? What are your thoughts? Have you heard about it? And that's another thing, the question, how to add value. Maybe you tell them something that they don't even know about their own market. So, that would be one way, is really getting to know your market. You can set Google alerts on Google for certain markets that you're looking in, and make sure you're getting stayed up to date on all the kind of big employment news, job growth news, all that kind of stuff. And then what do you say after the initial conversation? So what we do is we have a PDF that our marketing team does a great job of kind of creating for us, and that has a background of all of our past transactions. It has references from major brokerage companies and major brokers inside of those companies, has our team breakdown, all of our criteria very defined. So I would say the initial conversation is, make sure you have your criteria ready. So if they ask you what you're looking for, don't say, oh, I want apartment buildings in Charlotte. They're just like, okay, like we'll send you some apartment buildings in Charlotte, but say, I want 10 to 50 unit built between 1975 and 2010. I would prefer these submarkets. These submarkets probably are not of interest to me. So really kind of knowing your area, knowing the submarkets, the markets that you're looking to get into is a big piece of that. And we've, just transparently, we've been told before, when and these are on, 70 to $100 million deals. When we ask, why did we get the deal? We've gotten feedback. Well, it's just because I'm better friends with you than I am with the other guy who was kind of bidding. It's crazy to think about that such a big decision can be made, based on that. And of course, it's based on our track record and, the fact that we've never dropped a deal and we close and all that kind of stuff. But, the relationship with the broker is really one of the most important things. And so, meeting for coffee, meeting for lunch, taking them out to dinner. We always do closing celebrations with the brokers. Especially in the last year and a half, it's definitely been a broker market, and brokers have kind of held a lot of the power, as far as who's getting deals, who's not getting deals. And, it's shifting a little bit now with the market, but we still treat brokers the same way. We like to kind of not hold them on a pedestal, but we treat them really, really well. We get them feedback. We're even at the point now to source some deals in kind of the slower environment. We're selecting all the markets that we're in and that we want to be in. And we're going through CoStar and other services to come up with a list of all the deals that fit our criteria from a submarket, a size, vintage perspective, and making sure they haven't traded very recently. And we're sending them to the brokers that we have really good relationships with. And we're saying, hey, do you have any relationships, any relations, with the seller? Do you think they would sell? What price? Excuse me. And, that's uncovered already, a couple of good opportunities for us. Kevin is asking, how do you handle a retrade conversation with the broker? So we don't call it retrade, we call it reprice. And that's kind of a little tongue in cheek, but we had to do that on a deal pretty recently, kind of when the debt market was going a little bonkers, and our initial quoted rate was like 1.5% lower than where we were getting term sheets. So that's about 150 basis point swing. And they will usually, for the larger deals, they'll have you submit a buyer questionnaire when you kind of present your offer, and they'll ask you, do you have interest rate sensitivities for possible interest rate increases? And on that specific questionnaire, we answered yes, we have interest rate sensitivities up to 50 basis points. So when the interest rate moved 150 basis points from our initial kind of look at the deal to getting term sheets, there was no, it was inevitable, as far as what we had to do to that deal, because we have a responsibility to our investors to hit certain returns. And if our interest rate is, now a 6, when it was initially quoted at a 4.75 or whatever, that impacts returns. And there isn't a whole lot that we can do, as far as anything else with the underwriting, because we want to keep that conservative underwriting. We don't want to try to move things around and make the deal work a whole lot. If it was 25 or 50 basis points, the deal would still work. But when it's such a swing like that, in that specific instance, there honestly wasn't a whole lot of pushback on the reprice, because there was just too much going on in the market. I mean, every other deal that they had was either falling out, or people were freaking out on the buyer side and saying, like, we can't do this deal. And so we actually had the conversation really up front before we even knew what number worked for us. So we just called the broker and said, hey, look, we just got our interest rate quote, and we literally had gotten it like 2 minutes before I called the broker. And, we just said, look, the interest rate just came in way, way higher than our sensitivities, and we're going to have to reprice this deal. We don't know where that number is yet. We're going to find that out, within the day, and end up calling him later that evening. But we told them as soon as humanly possible that this was going to happen, just to be transparent. And that was part of the conversation is, look, we just want to be transparent with you. It's not our fault. It's not the seller's fault, but the market has shifted so badly that this deal just doesn't work at the initial price. And so, we ended up having to do that and, have that conversation with the broker. So when you have a real reason to reprice a deal, the conversation shouldn't be, it's never a comfortable conversation, but there is a reason for it, and the broker should understand that. And, all of his other deals were falling apart. So he was, grateful that we were coming to him, so transparently and so upfront. And, we ended up negotiating, I think, $6 million off of the deal and still, getting the deal done. So that was a big part of it. And, we got feedback at the closing, kind of process of that deal that a lot of the other buyers didn't react the way that we did. A lot of them kind of tried to play it secret that, things were happening. And, brokers know they are in the market all the time. They've got multiple transactions going on at a time. So, when everyone is doing the same thing, and one person is not, and kind of staying quiet, you worry about the quiet one more than the people that are actively reaching out and letting you know what's going on. So that was a good outcome for everyone. We got the deal closed. The returns actually got a little better for us, and everything worked out for the seller as well. So let's see, what would be the preferred way? Kevin's asking, what would be the preferred way an established investor wants to be approached about them investing in a multifamily deal with you? So what would be a preferred way an established investor, assuming us, would want to be approached about them investing in a multifamily deal with you? So I'm going to answer that how I think I'm understanding, and if I'm understanding that wrong, please put down in the chat. But what I think you're asking is, as an LP, you're asking how we would want to be approached by a established investor who wants to invest with us. And I would say, we have an investor relations team that handles all that, and that's all they do. So I would just reach out to them, and say, hey, they have a form that you can fill out, and Marco, Taylor, or Andrew will hop on an intro call with you, kind of figure out if our goals are the same, if they kind of match up. It's not a sales pitch by any means. We ask a lot of questions of you as well, and kind of see if it's going to be a good fit. So, as a beginner or an established investor, that's how I would kind of start that conversation. And yeah, feel free to ask any follow-up questions on that if I didn't answer that correctly. PJ said, interesting that you are chasing the brokers as an agent. I'm always contacting the buyer with deals. I would love to flip that, right? And that's why we get deals. So, brokers should be treasured. Trust but verify brokers, but also realize that they're just humans and they're just trying to make a living, and they represent the seller. And you just need to reach out to them. You need to be on good terms with them, and that's the lifeblood of everything that we do in this business. So yeah, that's funny. Let's see, any other questions? Let's see, I got to check the Q&A. We have, Ron is asking, we have 18,000 real estate agents here in Las Vegas. Maybe 5 of them know what they're doing, and these 5 already have a huge book of business. How does a newbie get on their radar? So if you're asking for, I'll answer as if we were talking about a commercial broker, because that's who we work with. We don't have a ton of experience with real estate agent, but I would assume a lot of the same kind of things ring true. So the short answer is that it is hard to get on these people's radars. They're not going to just be like, you have to think from their perspective. They have so many people reaching out to them, because they're so widely kind of advertised, and they're out there, and people know that they're doing deals, and they have the relationships with the sellers. So it's not an easy thing. I would say a lot of the kind of stuff we talked about in the beginning of this webinar rings true, as far as, as soon as you get a deal from them, even if it's on market. So this is a good piece of advice. Even if they have an on-market deal that they're blasting out to everybody, underwrite the crap out of that deal and understand everything about that deal, tour the deal with them if possible, and then get them, really solid, concrete feedback on that deal, because they appreciate, feedback from the market and from buyers. So if you're not up to the point where you're going to source, a ton of off-market deals with them, even just looking at on-market deals, with them and everything that they have kind of pushing out, analyze those deals, get feedback to them about those deals, and slowly kind of start building that relationship with them. And if you're not local in your market, as far as like where you're looking to buy, we've done trips to Texas and Florida and Charleston and all kinds of places, and we'll spend 4 days to 7 days in a state. And like last year we went to Houston, Dallas, Fort Worth, and Austin. And on the commercial side, there's mainly a couple of major brokerage firms, Berkadia, JLL, Cushman & Wakefield, those kind of CBRE, all those kind of Walker Dunlap. There's a good amount of them, but all of those kind of commercial brokers are based in each of those markets. So, we just reach out to them a couple weeks or a week or so before we come down and say, hey, we're going to be in, Austin, Texas on Tuesday and Wednesday. We'd love to meet up, grab some coffee. If they have a deal that's on the market, that's the best way. It's just, hey, can we go tour this deal? So that's kind of a lot of the things that we'll do. And, we spent probably 5 or 6 days down in Texas last year. We spent 5 or 6 days down in Florida. And just from, 8 a.m. to 9 p.m., just meeting with, every single broker that's there, taking them out to dinner, giving them more about your background, learning about them. And, I wouldn't expect that they take out 2 hours of their day for you, especially if you're starting new, but even just touring one of their deals, is a good way to kind of meet up and ask them for coffee or something a little bit less committed than a dinner or something like that. Is a good way to kind of make that first introduction. So getting, boots on the ground is something that we prioritize a lot. And, we do a lot of travel on the acquisitions team, doing that. So I would say that that's a good place to get started there. I didn't catch the broker names. Could you type it in here? Yes, I can do that. How did the auctions work? Some of the properties I've been interested are on auction. We've never done an auction deal, so I wouldn't be able to help you out there. Might be some good deals at an auction though. Kevin's asking, how do you recommend advertising on social media as a starter when you're trying to get investors? I'm sure we have webinars on this. This is unfortunately a little bit out of my realm as far as, mainly what I do is acquisitions and kind of working on deals. I trust, Dan and Andrew and the team to get us the money and the investors, and they do a really good job at that. So, I would say, that would be a good question for them. And we probably have webinars on here that go over that a little bit. I can take a stab at it. I would say making sure you have done the work up front to understand multifamily and understand, the markets that you're looking in. I think, on LinkedIn, especially just scrolling through the feed, you can tell a lot of times who has, put in the work to understand what they're talking about before they start making videos of themselves, talking about stuff. But there's also nothing wrong with just putting yourself out there and seeing what sticks. I know it works for a lot of people, and people get interested in that kind of stuff. So I'd say just don't be shy about putting your stuff out there, but also make sure that you're not leading anyone astray, and you really understand what the return profile looks like for investors, what the market looks like, what are reasonable expectations. There's people still talking about the returns that people were able to make a year and a half, 2 years ago, when everything was going bonkers and interest rates were at 3%. That's just not a reality anymore, as far as like doubling your money in 18 months. Now those deals are still out there, but they're definitely not as widely spread as people are suggesting in this market right now. Are there conferences or meetups that brokers frequent you suggest we attend for networking? So if you're looking more like regionally, like local brokers in your markets, the real estate meetups are great. Like the REIA, I think, are good meetings for that for some of the smaller brokers. If you're looking at, institutional level, more stuff like that, I would say NMHC, the National Multifamily Housing Conference, is the big one. That's the end of this month in Vegas. So that would be, one suggestion there. But trying to think, I know Bigger Pockets has some stuff for, smaller brokerage, smaller meetups. But just, searching your city and searching real estate meetup and just going to some of those. I've gone to, a bunch of those that have been of some value. I've gone to some that have been of little value, and I've been to a few that I've made that one connection or met that one person where it made going to all the meetings worth it, just by getting, one deal. So I definitely recommend that. Ron is asking, do you ever work with a buyer's broker? Have you guys ever paid a real estate broker's fee on an acquisition? We don't typically. We typically just work with a broker that's representing a seller, and we'll go in and have a relationship with that selling broker. I don't think we've done it in the past. I wouldn't say that, if a seller comes to a broker and says, I'm not paying your fee, but sell my property at X dollar amount, and we get that deal from the broker, and he says, hey, here's the deal, here's the financials, we underwrite it, we think it's a really good deal, and he says, the seller is not paying commission, you'll have to pay me. If it's a good deal, I'm sure we'd be open to doing that. We just haven't done it in the past. Jay is asking, do we hire someone who specializes in the type of transaction we are looking for? So are you asking about hiring a broker? Because I would definitely say if you're hiring a broker to sell one of your properties, definitely yes. So you wouldn't want to hire, a industrial broker to sell your multifamily deal. If you're asking if you hire somebody on your team who specializes in the transaction, I would say you probably don't need to hire somebody up front. You can probably learn it and then, kind of hire it out, which is kind of the typical way there. But, it's for even the car washes that we buy, we always work with pretty specialized car wash brokers, which is, a little funny, but they're definitely, out there and they do pretty well, funny enough. So, I would say definitely working with a broker who specializes in your asset class is important. There's so much nuance with each asset class, and if you're trusting them, with such a big financial responsibility as selling one of your deals, you want to make sure that they're the best in the business at what they do. Richard asks, what adjustments are you doing in your analysis modeling for properties in different markets in 2023? We made a lot of adjustments towards the later half of 2022, just based on where we saw interest rates going, where we feel rent growth is going, where we feel lease up velocity is going. We buy a lot of Class A lease up deals, and a year and a half ago, we had deals that were leasing 40 units a month and just going absolutely crazy. Even 60 units a month. I mean, it was just, they could not build apartments fast enough. We're definitely seeing that slow down a little bit. So, what we'll look at is, if it's 4 months in the lease up, we'll look at the past 4 months and see, how many units did they lease? What months were they leasing them in? Because the winter months are going to be a lot slower than the summer months. So we'll kind of look at, seasonality along with that, and we'll always decrease the number of units, even if the 4 months that they started was like November, and it's the slowest leasing season through the holidays through December, January. We still are being very conservative with lease up velocity. We're looking at micro supply within the submarket. So how many new apartments are being built, in the next 6 months, in the next year, in the next 2 years in that market. You have to be a lot more aware of those kinds of variables now than a lot of people were a year and a half or 2 years ago, when it was just really easy to find a deal that was leasing up at 40 units a month and rent growth was from the first lease to the last lease was like a $400 difference. It was absolutely insane, especially in places like Florida and Texas and the Carolinas. So that was a long answer. I'd say the shorter answer would just be we're more conservative on rent growth. We're more conservative on lease up velocity. We're more conservative on expenses. So insurance premiums are going up, way up. Taxes, we always get Ryan tax consultants. Only if we're going to buy a deal will we get them involved, because there is a fee associated with using their service, but we want to make sure we're very accurate on property taxes. And we always call the counties. We have a internal database now of all the counties that we've underwritten and how they reassess taxes, how often they reassess taxes, what our actual tax bill ended up at versus what we underwrote. So we're getting, pretty good on taxes. Rent growth, I would also say is more conservative for sure. The general rule of thumb is 3%, but I would really look into, like I said, the supply in the submarket, how many more apartments are being built within your kind of competitive kind of area, because you might not see 3% in some markets and some locations for the next couple of years. So definitely being more conservative. Exit caps are a little bit higher than they were, but also entry cap rates are still are getting higher and are pretty high based on where they were a year and a half or 2 years ago. So just a few thoughts there. What is your recommendation for a new person to do to get in a good team with a lead sponsor? I'm in a bunch of groups, but most are newer investors. So like I said, I don't have personal experience with this. I have done some smaller stuff on the side, but that has been all JVs. So I've always just gone and found a deal, brought in 1 or 2 partners, and we'll partner up on the deal. They'll bring the capital, I'll kind of turn the deal around, and then we'll refi and kind of continue rolling like that. But I guess for that specific situation, there's a couple kind of responsibilities on every team. And one of them is, capital raising / marketing. Another is finance or asset management. And another is acquisitions / I guess acquisitions would be one. So I would try to pick one of those that you're going to be really good at. So I'm assuming that if you're looking to go into a good team with a lead sponsor, the capital raising is already kind of taken by them. But every good lead sponsor is always looking for a great co-GP that can raise, $5 or $10 million, pretty easily to kind of help with the capital raise. So, I would say getting good at one of those 3 buckets, like getting really, really good at one of those 3 buckets is a good place to start. But again, don't have a ton of personal experience with kind of joining a syndication group or a lead sponsor or anything like that, but I hope that helps. Tyler Lyons says, we're a newer GP and under contract on a deal. Congratulations. So our bandwidth is tied up until we close that one, but we'd like to continue to tour deals to continue to learn. Brokers feel like we're wasting their time if we're touring deals, but realistically not able to close for at least a couple of months. No, I would say definitely keep the pipeline open. That, like, I'm preaching that all the time, is like, the results that we see today are a lagging indicator of what we did like 2, 3, 4 months ago, especially in, these larger commercial transactions. So like if we get a deal under contract, that is actually a sign for us to step up our kind of new deal vetting and trying to get things ready. And I would even say if you're under contract now, depending on how long your contract is, you really only have 2 or 3 months until you close that deal. And if you get another deal under contract in the next couple of weeks, you won't have to close that deal until a couple of weeks or a couple of months after that, especially if you put extensions in. So I think there's ways to kind of spread those 2 things out and still be really active on trying to find deals. Because what you don't want is, I don't know if this is your first deal or not. You said you're a newer GP, so maybe you really want to just focus in on this deal. But, our kind of methodology has always been, we get a deal under contract, we focus in fully on getting that deal closed, but also we take that as a sign that we need to start ramping up to find the next deal, to find the next deal, find the next deal. Because by the time, a year goes by, you realize, in the time of closing all those deals, you missed half of the year in kind of sourcing deals because you're so focused on closing. So it's always a balancing act. But on your specific question on what brokers feel like we're wasting their time, if you're touring deals and not able to close for at least a couple months, I don't think so. I think as long as you're staying active and I would definitely tell them you have another deal under contract. So, you're not kind of trying to hide anything from them. We always will tell people that we have a deal under contract, and we'll kind of leave it at that. But yeah, I think you definitely should stay, stay on top of sourcing new deals in that kind of scenario. I'll just put my email down in the chat. We've got a person, Timoy, sorry if I pronounced that wrong, that's currently underwriting a deal in Charlotte. I will put my email down if anyone has any questions, kind of post a webinar or anything comes up. I'll do my best to get back to you as soon as possible on that. Awesome, I got the name right. So yeah, that's pretty much all we had for today. I hope that was helpful. If there are any other questions, we can try to get them done here before the close of the hour. But if not, thank you all for joining. Thank you all for taking some time out. I hope it was helpful. My email is down there in the chat. So if anybody has any questions, kind of post webinar, feel free to reach out. And yeah, I think that's it. So thank you everybody for joining. Have a great Tuesday and a great rest of the week. Happy New Year.